OPEC has agreed to cut production for the first time in 8 years. Saudi Arabia is making the biggest cut, while regional rival Iran's got an exemption. Will the agreement hold, and what does it mean for the Middle East? This is Inside Story. Hello and welcome to the program. I'm Hashim Ahalbara. The last time oil cartel OPEC cut production was in 2008. At the time, the world was reeling from the financial crisis that began in the United States. And the global economy has struggled to return to normal since then. But economic as well as strategic considerations have led top oil producers to maintain and even increase output levels despite prices going into free fall. They finally agreed to cut production in Vienna on Wednesday. Supporters of the decision say lower supply will push oil prices higher. Non-OPEC member Russia also agreed to reduce its output for the first time in 15 years. But there was pushback from countries worried about revenues falling in the short term. And so the deal won't affect all OPEC countries equally. Top producer Saudi Arabia is trimming production by 486,000 barrels a day. Its output will now be just over 10 million barrels a day. Iraq had initially opposed cuts, but Baghdad now says it will reduce output by 200,000 barrels a day, beginning in January. Iran agreed to freeze output at close to current levels of 3.8 million barrels a day. Libya and Nigeria were exempted because of continuing conflicts in their countries. Let's bring in our guests in Vienna. Oil economist Cornelia Muller. In Riyadh, John Sfakianakis, Director of Economic Research at the Gulf Research Center. And in London, Manusha Hartakin, energy consultant and former senior official at OPEC. Thank you for joining the show. Let me start by asking Cornelia Muller in Vienna about what has prompted OPEC members to suddenly set their differences aside and agree on cutting production.
Well, I would say what has prompted it is that there was a U-turn of the Saudi view that let's produce as much as we can, and the realization that, you know, also the kingdom needed higher oil prices, so they were willing to be a little bit more giving in terms of finding a compromise. And really the oil prices were low for so long, which was a problem for many of the member countries, less the Gulf states, but if you look at the Nigerias and the Venezuelas and many of the poorer countries, it was a real problem. So at some stage, I think there was enough momentum to get a deal going. We're anyhow next year going towards an equilibrium of supply and demand. So bringing that forward a little bit was a good idea. And lastly, I think the personality of the new Secretary General was very good too. He really helped to make cajole people into doing the deal.
Let me go to John Sfakianakis in Riyadh. Mr. Sfakianakis, is it merely the fact that OPEC members realize that it's time for some change, it's time to increase prices, otherwise the current situation could just further strain their own economies?
Absolutely. It has to do mainly with the fiscal plight of all the OPEC producing countries, be it if you are in Nigeria or if you are in Qatar, Saudi Arabia, Iran. All of them in different degrees have been facing a fiscal situation that increasingly became threatening to all of them. Large budget deficits, very low growth, low investment appetite, low confidence, and a lot of them have been beginning to tap the international market. So as a result of that, it created enough consensus for them to decide that the policy of putting down the high margin cost producers is leading to very little. And a lot of people have been calling or have called the death of OPEC, and suddenly they took a decision, but mainly had to do with the fiscal situation of all the oil-producing countries, some better, some worse, but overall, it's good that they decided to move ahead.
Takin, is it safe to say now that the market will swing from glut to shortage?
No, looking at numbers, it wouldn't. But the decision has a psychological impact because there was, if we think everything will be, all the cut will be actually implemented, without this decision, there would have been another million, another 1.5 million, depending on how much Russia comes in, extra oil, which would have continued coming into the market in 2017 on. So with that expectation, the price was low. The fact that now this potential excess oil is getting less, I think has made the price jump. So when the price jumps on the news, it doesn't mean that the world supply demand quantity of oil being imported and exported or used and consumed by refineries doesn't change over next hour or so because of the announcement. It is a psychological impact, and it is because the oil market is not just physical trading, is paper trading, and people take positions in the next few months in the futures market, as well as the speculators. It is that which made the impact, but the price go up. But looking at the fundamentals again, there is still excess oil coming into the market. But this reduction is definitely very significant.
Cornelia, this deal is yet to be implemented. What are the guarantees that all member states will comply by the decision that was reached in Vienna?
There are never any guarantees with deals like this, but you have a high-level committee which is chaired by of three countries, three ministers, which is chaired by the oil minister of Kuwait, which will overlook this. And as Kuwait is taking some of the brunt, they will certainly look at it. So I would say for the next 3 to 6 months, and it's a rolling deal, so it's there for 6 months, I think they will comply. After that, we will have to see. But as the previous speaker said, there's a big psychological effect, and that's sort of the main thing. If you look at the numbers, doesn't quite work out, but it has the big psychological effect. This being said also, let's look at next year. At some stage, both OPEC and the IEA forecast that at some stage towards the end of 2017, we would reach a demand-supply balance, and we probably get there. We'll get there now a little bit earlier. So yes, they will adhere. Even if they don't totally adhere, it's a good effect on the market.
OPEC countries produce about 1/3 of the world's oil. So what about the other 2/3? Production in the US has fallen from 9.6 million barrels a day to 8.6 million over the past 2 years. But now if prices rise, shale oil producers there may be prompted to resume drilling. Russia, which produces around 11 million barrels of oil a day, had pushed up its production in recent months. But now, as we mentioned earlier, Moscow says it's slashing output by about 300,000 barrels a day. That's half of OPEC's goal. The bloc wants outside producers to cut 600,000 barrels a day, but it's unclear where the remaining cuts will come from. John, is it fair to say at this particular moment that the success of the decision made in Vienna will largely depend on whether non-OPEC members will step in, particularly Russia?
I think that the Russian role is very important, and we shouldn't underestimate the decision-making process in moving forward with the Moscow cutback. I think it's historic that the Russians have joined at a time when OPEC was struggling to see who's going to cut within OPEC. So it's not just the Russians, however. I would say that everybody else has to comply, and comply is always a challenge. And it's not just a 6-month play. We need to see how the shale oil producers are going to behave, how capital markets will behave in the U.S., and what will be the return of the U.S. drilling industry. It seems that they're not out. They're very well in place. So as prices keep on going up, U.S. drillers could be participating in this. So it's a game of wait and see. Yes, it's good that they made a decision and prices have reflected that, but it doesn't mean that oil prices are going to be going at $80 a barrel. However, The fact that they took a decision is very historic, and I want to highlight that, because
given the fact,
had they not decided, to cut back, oil could have gone down to $30 and $20 a barrel within a very short period of time.
well, it's good news in the sense that for them, in the sense that the OPEC has been beset for really quite some time by divisions. Mr. Manushahar Takin, let's assume that prices continue climbing for the coming weeks and months. Wouldn't this push shale oil producers in the United States of America to step in and start drilling once again, which could, by the end of the day, lead to an oversupply in the market, and the whole reason behind the Vienna decision could just become with absolutely no sense?
Well, to yes and no. The shale producers in the United States are flexible. Operations are on a short-term basis. When OPEC had so-called price war, if we can use that term, which is not exactly correct, but the media have been saying, and other previous price wars were, for example, in 1986. In those days, the competitors were like big elephants, like big tankers. They were huge platforms, big mega projects, $1 billion, $2 billion, and a production capacity of a few 100,000 barrels per day, which when came on the stream, they couldn't close the taps, so to speak. But this time, the shale oil producers, as I think other panelists, the colleagues mentioned, are here. And in fact, they were partly to blame for this excess oil which came into the world market in the last 4 or 5 years, about 3 to 4 million barrels per day. But they are flexible. I emphasize the big platform mega projects compared with these. There are different in the way they can react.
I see a point.
And in fact, we have already seen the reaction because the prices became up less than $30 to $40 and so on. Drilling has increased in the United States. Shale drillers, shale operators can start a well, drilling it, and they can finish within a few months and bring it on a stream. And if the price goes up, they would not drill the second well, and so forth. But another point in answer to your question is that, let me please mention this. There are several thousand shale oil wells which have been drilled, have been completed, but have not been fracked. So if the price gets to the margin, the break-even for an operator, that operator could frack, so-called frack that completed well, and within a week or so start production. So in answer to your question, yes, the shale oil producers can come back quickly. In fact, since the very sort of minimum price which occurred before, they have already begun to come back. The number of drilling rigs have increased, and if the price goes up, there will be more of them coming into the market.
Not only that, Mr. Takin, and they may ask Cornelia about this, the numbers show that shale oil has not been really undermined by the low price of oil, because if you look at the output, it has peaked to 9.6 million barrels per day in April to only 8.58 million barrels per day. So in a way or another, it's still there. The potential for them to come back and to pump more oil into the market is massive.
It's there, but I think it's a yes and a no. It's there, but the shale oil space has changed because this was a highly levered industry. There was a lot of leverage in the industry, and when the prices went down to $30 and below, quite a few companies went bankrupt, and other companies picked them up on the cheap, picked the wells up on the cheap, and those were mainly bigger companies like Exxon, like Chevron. So what we will see is that space is different. It's not quite as entrepreneurial anymore. And yes, it is right. You can get a dollar invested in shale will result in production in 6 to 18 months. That's still there. But with bigger companies, they move a little bit more slowly, even if they can react quicker. So yes, they can come back in. But it's behaving. It will start to behave more like a big company. And let us also not forget that in the oil field service industry, a lot of people have been laid off, and in that the major oil companies have cut it to the tune of about $1 trillion over the last 24 months in scheduled investments. So that will work its way into the system over the next 2 to 4 years as well.
I see your point. We mentioned as soon as we mentioned OPEC, the name of Saudi Arabia jumped out. jumps out. Mr. Sfakianakis, because you've spent quite some time in Saudi Arabia, until recently the kingdom has insisted that it won't cut production unless Iran freezes its output. That didn't happen. Is Saudi Arabia losing control over OPEC?
No, I wouldn't say that. I would say that there is rational thinking, and what the prevailing policy is to maintain supply and demand. At the moment, there is a glut of supply, so Saudi Arabia needs to step in. In fact, I would say that Saudi Arabia went ahead and set aside all the issues and all the noise and made the right policy and the right choice. And it said to the world that, listen, I'm willing to cut about 500,000 barrels of oil in order to help everybody. And of course, that I think was a very historic decision for OPEC because it keeps it going. But Saudi Arabia shows its ability to be a visionary and also to be a leader. And I would say that going back to the previous comment about shale, is that the verdict, the jury is still out. We do not know how shale and the U.S. shale industry is going to behave. I would say that they have substantially reformed and restructured during 2014, 15, and 16, a lot of these companies. So we are in a new paradigm, and we do not know how the shale industry is going to be behaving when oil prices jump back to $60, $70 a barrel. So I wouldn't be very forthcoming to expect that shale is going to disappear. I would be a little bit more cautious, and I would say that let's wait and see how shale behaves.
Mr. Takin, until recently, OPEC has been criticized for being inefficient, crippled by divisions. Do you think that OPEC has to reinvent itself to be able to cope with the challenges it will definitely face in the near future?
I think those comments are unfair. OPEC has reinvented itself several times during its history. It was established in order to have a collectively bargaining position against the Seven Sisters, so to speak, in 1960s, you see. And then afterwards, in 1973 or 74, OPEC actually was strong enough to actually decide the price of oil. And then 1986, it went back to let the oil, and that is important today, that OPEC took the policy to let the market decide the price, the supply-demand balance. And in fact, it has done it so. But as a major producer, as countries that rely on the revenue for their national resources very significantly, for their budget, export, etc., they try to maneuver and try to adjust as much as they can by, for example, the production programming that they have implemented. So OPEC has done this type of exercise before. In 1986, I mentioned, in 1998, 99, 2008, you stated it. No, OPEC has been through this, has not or you'd like to use the reinvention? Yes, OPEC has reinvented itself several times and it still definitely is relevant. Yes.
Let me put it in a different way then, to Cornelia. Cornelia, what determines OPEC policies? Is it geopolitics or is it purely economics?
It's a combination of all, and you can't totally disentangle it. Yes, geopolitics is clearly in there, and there are not every OPEC country gets along with every other OPEC country the same way at all the time. So that certainly goes in. But OPEC has overcome these sort of issues all the time. Let's not forget OPEC functioned during the Iraq-Iran war, and those are two member countries. So yes, it is certainly also economics. This time it was, as our colleague from Riyadh said, a lot of it was economics. You had budgetary constraints, and something needed to be done. And let's not forget also, Saudi Arabia has a very ambitious program of reforming the economy and society, weaning themselves off oil, of the sole dependence on oil, which costs money, and therefore they're issuing bonds. And if you want to be in the debt markets, it's important that your main stream of income is reliable at a certain level. So yes, it's economics, and part of it is geopolitics, and it's absolutely right. OPEC has reinvented itself many times and is still very relevant.
John, now if you look at the latest data, it seems that OPEC won't be able to match the record revenue it made in 2012, which was about $920 billion. Don't you think it's time for the oil cartel to think seriously about the future, or at least plan B?
Absolutely, music to my ears. But I think that on that, to stress also the point made by Cornelia, is that Saudi Arabia and others, but Saudi Arabia to be more specific, has announced a very visionary plan, Vision 2030, to rid itself of its dependence on oil. Of course, we have always said that it's easier said than done, and within the oil-dependent world, not just the GCC, but beyond, Saudi Arabia today is the only country that is looking to reform in a short period of time its economy and make it less linked to oil. So definitely Saudi Arabia is doing that. The United Arab Emirates for many years it has been talking same language and others throughout the oil-producing countries. But again, it is going to be a challenge over the next 10 years to read oneself while oil prices are trying to recover. The good thing is that Saudi Arabia and other oil-producing countries are investing a lot in human capital. They're looking at other alternatives. They're looking at tourism and services and retail. So it is important that now the story is told that oil is not always going to be there, and we have to think of the era beyond oil. And I think that Saudi Arabia has gotten that and is moving ahead.
Speaking of the post-oil era, and let me go to Mr. Takin. Mr. Takin, the Paris Climate Change Deal of 2015 commits all countries to cut carbon emissions, which could be the beginning of the end of the era of oil industry. Isn't this going to be a platform for many countries to seriously think about alternatives, particularly when it comes to biofuels or others?
Well, the question is definitely, the answer is yes. And not only the oil producers, everywhere in the world, the economies, the entrepreneurs, individuals, government policies, and companies who want to make money on a larger scale, they are all in the direction to find a new alternative, a new technology, in the same way that we have in communication, mobile phones and so on, the things have changed. So there is this innovation, new technology which brings so much, as well as another important fact, as you mentioned, public consciousness of environmental situation and the damages from fossil fuels and CO2 and so on. But that is not a sort of recent issue. That has been there, and in the last 20, 30 years, the world, the people, managers, government executives and so on have become much more aware. And even if some companies, majors, denied it, they have all now reached the stage that they accept it. And these environmental issues, conservation, alternative energies, substituting for oil, have actually been happening. So the amount of oil used for a unit economic growth, as it was in the 1970s and 80s, now, even within industrialized countries and developing countries both, is now much less. 50% or 40% of that oil is required now in order to generate the same economic production and well-being and so on. So what you are saying has been there, and it is gaining strength. This awareness, like with the Paris Agreement and agreement acceptance by the governments to coordinate, is there. But it has a lead time. It takes time, you see. I think solar and photovoltaics and wind and so on, they have a lead time, I think a capacity, the cost. Many of them still require, not everywhere, but in many locations, they still require subsidies. So yes, OPEC and producers are aware of it, but it also has a lead time of several years.
Unfortunately, we're running out of time, and we'll definitely have another opportunity to talk about the decision made in Vienna and its impact on the future. Cornelia Meyer, John Svakianakis and Manoushahar Takin, thank you very much indeed for your time. And thank you too for watching. You can see the program again anytime by visiting our website aljazeera.com. And for further discussion, go to our Facebook page, that's facebook.com/AJ Inside Story. You can also join the conversation on Twitter. Our handle is @AJ Inside Story. From me, Hashim Al-Barra, and the whole team. Bye for now.